If you invest today $50,000 in QDTE, only $50,000, and then you don't put any other amount of money, within 2 years, your $50,000 will be $80,000. So that's a big return, guys. Right? It's a big return. Now, if we just put, let's say for example 25, we can see here, I'm going to show you how, if I calculate, you see it went up. So I'm going to show you, go all the way to 10 years, and also I'm going to do 15 years, and I'm going to do 20 years and see how much that amount will be. But before going to do this final calculation, I'm also going to do another calculation where, for example, you have the money right now and you want to retire today, how much you'll be able to put in this calculator, right, and retire today. I'm going to show, I have a spreadsheet pretty well designed. I'm going to show you the prices of today. This is Round Hill ETF, Round Hill S&P 500 zero DTE cover call strategy ETF. Price of today is $52.44, and if we look up 52-week range, has range between $48 and up to $53.70. This also considered the split and everything it's in it, right? And I'm going to show the return despite all the split and everything like that. And inception date of this ETF, it came out on the March 6, 2024. So it's been out for not too long ago, but I mean it's been out since so this is sober for about 6 months, and has been paying dividends since then. And I made also a video about this ETF I think few months ago, or yeah, I think 3 months ago, and I gave you details about this one. So if you want to know more, you can check my other video I made, but you don't have to, because this video will actually explain all this ETF, what this ETF is. If we go to Round Hill ETF itself, we can see XDTE S&P 500 or zero DTE cover call strategy. Utilize synthetic cover call strategy that seeks to provide current income on a weekly basis while also providing exposure to the price return of S&P 500. So you get two things here. You get the dividend, but also you getting the exposure to the S&P 500, right? While you get a weekly distribution, which is an income. Pretty good. Now, if we look at the overview of this ETF, because before you invest your money, you have to know what you're investing in. And in this channel, I always talk about this type of ETF, and I give you details. And whenever there's this type of updated news, I always make sure you get those ones. So don't forget to subscribe. And if you like this content, always give me a like. So now, if we look at the distribution yield on the right hand side, right now it says 34, but we're going to see that distribution and distribution that I have, which is average overall since inception. Overview of this ETF, Round Hill S&P 500, 0 day to expiry, okay, is the first to realize 0 day to expiry date, out of all the ETFs, because a lot of other ETFs, they write calls, but they don't do what we call 0 day to expiry. And I'm going to explain what that 0 day to expiry means. So that's the first thing you have to know. So, and then it says XDTE, right, seeks to provide overnight exposure to S&P 500 and generate income each morning by selling out of the money 0 day to expiry call option on the index, which is the S&P 500, right? XDTE is an actively managed, so they don't hold those ETF the call for a long time. For example, I've talked a lot about yield max ETFs and other other income ETFs. They can write call for like a 2 weeks, 1 week, 1 month, right? This one didn't do that. You just hold the call today, and of course overnight they sell. That's why it says 0 day to expiry. So it doesn't overlap one day and they sell right away. There some advantage to that, and they also disadvantage to that strategy. They're going to explain in the question Q&A down. Well, I'm going to read to you. So why should you invest in this ETF to begin with, right? There are other thousands of ETFs. Why should you invest in this one? So these are their main compelling reasons that they have mentioned here. The first one is, of course, you're getting weekly distribution, and there are very, 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 very little that I know any other ETFs that pay weekly distribution. This one you get weekly distribution, so you'll be able to buy things on a weekly basis, right? You don't have to wait a month or quarter like other income ETFs. And also income potential. It has income potential because XDTE seeks to generate income through cover call strategy ETF. They did here income potential because we never know. They actually have disclaimer. They might, now and then maybe cut their dividends or distribution, but they say there's a potential. And so far, they've been paying since inception. Harness the volatility. It does harness volatility. So XDTE sells 0 day to expiration option on S&P 500 and seek to exploit a structure market mispricing. And when you look at the expense ratio, you're paying 0.95. It's a little bit higher, but think about this: you're getting 30 to 40%, annual distribution, and you're getting weekly, so 0.90. That's less than 1%. So that's nothing. We look at the AUM, asset and management, right now. It has 71 million. It's not a billion yet, but it's 71 million. It's something. And launch was on the 3rd of March 7th, 2024. Management style, this is actively managed. If we look at the holding, of course, they do right call on S&P 500, but this is just a future S&P 500 because they don't hold the S&P 500 itself. They just write on the future market of S&P 500. Performance now, if we look at the chart, we can go all the way to, this is it's pretty much a flat out they showed here. But if we look at since inception, has reached about 7.19%, because it's been flat. This is after the split and everything like that, right? So distribution that pays weekly, and distribution rate right now is it's 34, but I think I read here was 34.88. So again, disregard this distribution right now because I'm going to give you the real distribution that I'm going to use in our calculation today. If we look at the whole distribution history, and this is the schedule for distribution, so the next one you're going to pay is going to be on September 4th, September 11th, and September 18th, and then September 25th. These are the schedule for next distribution. So if you want to invest and capture that dividend, those are the dates you have to know. And of course, you have to invest 1 day, 2 days before the distribution date in order to capture those dividends. You can see the first time they paid was a March 28th. That was the first time they paid, and it was only 21 cents. And then they've been paying since then. They've been paid quite good amount of money. And then the highest, I think they paid about 40 cents at one point, right? In September, in October, in August 9th, they paid 41 cents. That was highest. Pretty much this year they paid the most, the most money. We can see here 38. So if you round up, it's about 39 to 40, to 40 cents. But this month they kind of cut a little bit. So this month they only pay, which is going to be a week from now. Well, actually 2 days from now, they paid only 26 cents. But what I did in my math, which is a pretty good, I did average on all of these, and I'm going to give you the accurate number of exactly how much you can expect. Because if you invest in this type of ETFs, you have to know, yes, they pay, the pay are not consistent, right? So they are all over the place. So for you as an income investor, you want to invest in this type of ETFs, guess what? You can't just say, oh, I'm going to get $40. No. But if you put an average, you know exactly, and we can predict average because we can take the numbers, how long they've been paying, and we take those numbers and we do average of those numbers. That's exactly how much you're going to put in a calculation or in your spreadsheet to know this is how much you're going to get every month. Even though they pay higher, they pay less. That's calculation, for someone who wants to be in a safer margin of safety, for your income and reliability of those dividends. Very important to remember that. Now, what is a cover call strategy? A cover call strategy involves holding a long position in an asset while selling call options on a same asset. The strategy aims to generate additional income from the option premium, but limit the upside potential if the asset's prices increases above the strike price. XDTE implements a synthetic long position by purchasing deep in the money call option on S&P 500 index, which seeks to replicate the price return on traditional long-term position on the S&P 500. What are 0 day to expiration options? zero DTE option refers to option that have 0 day to expiration, meaning they're set to expire on the same date on which they are traded. So the same day, guys. That's how this strategy works. What are the potential benefit of selling options at the market open? So by selling 0 day to expiration options at the market, XDT potentially allows for investor to capture the full return of the overnight session. Unlike the strategy which may hold short option position overnight, XDT is uncapped from market closed until the new short call options is entered the following session. So, the too much explanation, but you get the picture here, guys. So that's all about this ETF. So now let's go to our math, right? If we go to our math, what I did here, guys, is very important. What I did, I calculate all the income that they paid so far, and then I just average. And average, you'd be getting 24 cents per week. This is not month. This is a weekly income. Only 24 cents. It's not. I'll show you this 24, the importance of 24 if we do our compounding. So overall, they've paid, $5.56 since inception, which is about 6 months ago. And if you combine that to the price of today, which is $52.44, you're getting $58, right? And then the yield, if you do average, because the yield as of last dividend is 34%, but as on average, which we're going to do here, we're getting only 24% yields annually. So, but this is very magical, and this is the number that I'm going to use on our calculation there to show you how you can generate only $50,000 will make you a millionaire within only a few years. So the first thing we're going to do is a projection of income. This is a projection of income of how much you should invest today. So for example, you say, well, I'm not going to invest my money today and wait for 10 years. I want to today. This is how you can generate massive amount of money. So the first we start with $25,000 because before I used to do only $100,000, and then people say, well, hey, I don't have 100,000. That's a lot of money. So I say, okay, well, I'm going to lower the bar a little bit, and I'm going to start with 25. How is that? So, and this is what it is, right? So I start with $25,000. I know 25 is not going to be enough money for you to invest and retire, but I mean, if you just want to invest 25 and see how much you're going to get, there it is. So $25,000 will give you about 25, 114 weekly, and that will be 5,950. And if you bet 50,000, it will give you 11,000 a year. And this is weekly. And if you want to know exactly monthly, for people who like monthly, what you can do, divide this amount and your income divide by 12, and there you get your week monthly, or you can take this one times 52 and divide by 12, then you get the same amount. So the amount that seriously for you to be able to retire using the 24% dividend with XDT as of today is about 300,000. It depends where you live, by the way, because a lot of places now are very expensive. So if you invest only 300,000, you're going to get about 71,000 a year, and that's a lot of money for a lot of people. Will be able to retire in a lot of places. I mean, unless you live in a high-end city, then it's not going to be enough. But if you live in a high-end city, maybe you have wealth, then you can go up to 500,000. And so now back to our calculation. Remember, I put here 24%, which is the average what I get from the average dividend you've received. And this is for people who is someone who wants to invest $50,000 today and then sit down. This does not include the appreciation of the ETF itself in value or decrease of the value. Of course, if it decreases, you get more shares, so your amount of money weekly will go higher. This is just calculating just the income you're receiving in investors' dividends and then buying more shares, how much you're going to generate. So if we take 10 years, only having $50,000, right? So if we do 10 years, which is about 120, we calculate here, we're going to get our portfolio from $50,000 will be $500,481. Now, if we do 180, let's go up more. 1, 2, 3, 4, 5. I'm going to do 180, which is about 15 years. Within 15 years, your portfolio will be almost 2 million. So think about that. Just 10 years, your portfolio is only 100,000, right? So this is magic of compounding, guys. Look, 120, that's 10 years. If you do invest 10 years, your portfolio is not 1 million yet, right? It's only 500, you know, it's only 548,124. Now invest 5 more years. Just wait 5 more years. Check the magic now. It's 180, and your portfolio will be closer to $2 million. 181, right? So if we go to 20 years, which is, so 180, that's 240, right? Which is 120 times 2, that's 240. That's 20 years. Check that. Your portfolio will be 6 million. Oh my god, this is crazy. That's how much you can invest in XDTE, and you can generate just investing $50,000 a day. And there's two ways to do that. You can invest either massive amount of money, just, like I've said, 300,000 is today, and you'll be able to retire from today. But if you don't have that much money, you just want to invest and wait around for 10 years, 20 years, even better, you're going to generate about 6 million, and that will give you a lot of income monthly. So that's all, guys, for today. If you like this video, again, just make sure you hit the belly button to show appreciation, and don't forget to subscribe to get this type of update. Till we meet again next video. Bye bye.